Hello, everyone. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are up today. Dow Jones is up 0.8, Nasdaq 1%, S&P 500 up 0.8%, Russell 2000 up 1%. Today is the last trading day of the week. We have a flurry of economic data that came out today. We're going to talk about them later on. Oil prices are down 1%. Treasury yields are up again today. 6 basis points between the 10-year and the 5-year Treasury yield. Let's look at our heat map. Microsoft is up 2%. NVIDIA is up 1%. Everything is up pretty much. Tesla is flat. Everything seems to be up. Any questions, comments? Please leave a question or comment. I'll try to get to it. Tesla pauses Optimus robot output following a leadership shakeup. This is big news. I believe that it pushes out Optimus revenues and profits for a few years. And in my opinion, Tesla may actually cancel the Optimus program, but we'll see. Tesla pauses Optimus robot output following leadership shakeup. So let's go through this. Tesla has paused Optimus robot production following a leadership change and ongoing design revisions. The new head of project, Ashok Alaswamy, aims to fix performance and hardware flaws before resuming output. The original 2025 production target of 5,000 units is now unlikely to be met. Tesla may reveal a redesigned Optimus at its next shareholder meeting to reassure investors. I mean, I never really believed this production target anyway, but I think Optimus, just like robotaxis, is 5-10 years away. The AI is just not there yet. The reliability of AI models is just not there. Tesla has reportedly halted production of its Optimus humanoid robot as internally leadership changes and unresolved design challenges forced a reset in the company's robotics roadmap. According to multiple sources within Tesla's Chinese supply chain, the electric car maker suspended procurement of robot components in mid-June, coinciding with a major shift in project leadership. Leadership exit sparks delay. The decision comes just weeks after Milan Kovac, the original head of the Optimus project, exited Tesla. His responsibilities have now been handed over to Ashok Alaswamy, the company's longtime AI software vice president, who is now tasked with steering Optimus through a significant hardware and software overhaul. Alaswamy, best known for leading Tesla's FSD initiative, is reportedly focused on improving design functionality before mass production can resume. Tesla's CEO Elon Musk had previously set ambitious targets for the humanoid robot, aiming to build 5,000 units this year alone. He also said 50 to 100,000 next year and then 500,000 to a million the year after, which obviously was never going to happen. By late May, the company had manufactured nearly 1,000 robots and acquired enough components for 1,200. With parts procurement now paused, industry insiders believe that target is no longer realistic. One supplier involved in the project confirmed that Tesla has not officially canceled orders, but indicated that no further parts will be procured until design revisions are completed, a process that could take up to 2 months. Musk, who continues to tout Optimus as an essential pillar of Tesla's long-term strategy, recently shared that the robot's latest version now includes voice interpretation powered by Grok, an AI system developed under XAI. The pause in production comes as Tesla faces mounting internal and external pressures. Over the past 6 months, at least 5 senior executives have left the company, including Omid Afshar, who oversaw Tesla's North American and European manufacturing operations. His departure at the end of June followed a broader executive shakeup that has left Musk and Tom Shu as the last 2 senior vice presidents on the core leadership team. That's not true. Alongside corporate turbulence, the Optimus still faces unresolved engineering challenges. According to Tesla's feedback to suppliers, the robot's joints are prone to overheating, the dexterous hand mechanisms suffer from low durability, and its battery life remains inadequate for extended tasks. The robot is currently being tested in Tesla's battery workshops, where its efficiency is reportedly less than half that of human workers. Despite these limitations, Musk's vision for Optimus remains ambitious. He envisions 50,000 units being built next year with long-term goals, including deployment on Mars and eventual production exceeding 500,000 units annually by 2029. These projections, while optimistic, have yet to be supported by annualized publicized production breakthroughs or widespread deployment in Tesla's factories. Tesla has invested heavily in the Optimus program over the past 3 years, partnering with hundreds of suppliers and assembling an R&D team of more than 400 people. The company had earmarked over $300 million for parts alone in 2025, based on a unit cost of approximately $60,000. So this is new information right here. R&D team of more than 400 people. Company had earmarked $300 million for parts in 2025, based on unit costs of approximately $60,000. Very interesting, but also not unexpected. We're going to get back to Tesla news later on. Let's switch back to House for now. House nears final vote on Trump's big beautiful bill as opponents flip. The House of Representatives barreling toward the final vote on President Trump's big beautiful bill, with Republicans increasingly likely to send a massive piece of legislation that will be felt across the economy for years to come to the president's desk. Approval is far from assured, but the White House and Republican leaders inched closer to victory Thursday morning after pressure campaign and yet another online session on Capitol Hill appeared to satisfy Republican holdouts concerned about things like the multi-trillion-dollar price tag and healthcare cuts. The vote timing is uncertain, with Democratic Minority Leader Hakeem Jeffries holding the House floor for over 6 hours Thursday in a speech that lambasted the bill on varied fronts, including at one point calling it a crime scene. Yet a vote is expected within hours, and House Speaker Mike Johnson projected confidence early in the morning as legislators on his side of the aisle raced to give the president a signature political victory and approve the bill before his self-imposed July 4 deadline. We have the votes, Johnson told reporters at about 3 a.m. Eastern, adding later during the Jeffries speech that President Trump is waiting with his pen. Johnson secured a key procedural victory early Thursday morning when the House voted 219 and 213 at about 3:30 a.m. to begin formal debate on the measure. Only one Republican voted no, Representative Brian Fitzpatrick of Pennsylvania. What appears to have moved many of these reluctant lawmakers into the yes column was not any changes to the bill itself. Today's vote is set to include 0 changes to the 870-page bill that passed the Senate earlier this week, but the promises of things like executive actions to address their concerns. As for Trump, the final vote couldn't come soon enough. The president posted at about midnight, "What are Republicans waiting for?" The early morning back and forth was just the latest twist in days of negotiations over a reconciliation package that is set to reshape large swaths of the U.S. economy, especially in the areas of taxes, energy, and healthcare. The package also includes a $5 trillion debt ceiling increase and is projected to unleash new borrowing that will lead U.S. national debt to surpass $40 trillion in the coming years. Interesting. All right. Let's move on to other macro news. Solid U.S. job growth masks weakness underneath. This is a Reuters article. Job growth was unexpectedly solid in June, but nearly half of the increase in non-farm payrolls came from government sector, with private sector gains slowing considerably as industries like manufacturing and retail grappled with Trump's aggressive tariffs on imports. While the Labor Department's close-to-watch employment report also showed the unemployment rate falling to 4.1% last month from 4.2% in May, that was partly because some people left the labor force. The average work week was shorter last month, suggesting that businesses were probably reducing hours amid rising economic headwinds. Although the overall number of jobs was very strong, okay, we read that. Non-farm payrolls, okay, the private payrolls actually came in lower. There you go. Government employment rose by 73,000, boosted by a 40,000 increase in state government education, which economists brushed off as a seasonal quirk related to the end of the school year. Local government education increased 23,000. Federal government job losses continue with 7,000 positions lost. And employment is now down 69,000 since reaching a peak in January. Private payrolls increased by 74,000 jobs, the fewest since October 2024. Healthcare added 39,000 jobs. So half of it, basically, half of the headline number is government jobs, and half of the private jobs is healthcare. 39,000 jobs spread across hospitals, nursing, and residential care facilities. Social assistance employment increased by 19,000. Outside these non-cyclical sectors, job gains were weak. Economists say President Trump's focus on what they call anti-growth policies, including sweeping tariffs on imported goods, mass deportations of migrants, and sharp government spending cuts, has changed the public's perception of the economy. Business and consumer sentiment surged in the wake of Trump's victory in the presidential election last November, in anticipation of tax cuts and less stringent regulatory environment before slumping about 2 months later. Manufacturing shed 7,000 jobs, while wholesale trade lost 6,600 positions. Professional and business service payrolls decreased 7,000. Retailers added a paltry 2,400 jobs. Work week fell to 34.2 hours from 34.3 hours in May. Okay. I mean, the biggest surprise here was the unemployment rate ticked down from 4.2 to 4.1 when people expected to tick up to 4.3%. Most economists expect the jobless rate will rise through the second half of this year and potentially encourage the Fed to resume its monetary policy easing cycle in September. Now, look at this thing. Monthly price changes in footwear at US retailers. Monthly price changes in footwear at US retailers. So you can see from the department store, Dillard's, DSW, Macy's, REI, and Nordstrom. Now, we have already said on this live stream that Trump's tariffs will take time to work themselves into inflation readings. Mid last month, we got to May inflation readings, and we said there would be some impact, but really it's going to start in June and will continue to ramp throughout Q3. So the idea that inflation is already down to 2%, I think is premature. So I would refrain from such conclusions. Inflation is coming. Trump administration, despite that, Trump administration will focus on Fed chair replacement in fall, Bessent says. So they want to announce somebody who's going to basically undercut what Powell says. The Trump administration will focus on finding a replacement for Fed Chair Powell this fall. This Secretary Scott Bessent told CNBC on Thursday, adding that officials had a lot of good candidates. Bessent said it was up to the Fed to decide interest rates, although he added that if the central bank did not cut interest rates soon, any potential rate cut in September could be higher. Asked if one could head both Treasury and the Fed at the same time, Bessent said that it hadn't been done since the 1930s, but did not explicitly rule out such a solution. Bessent has been named as a potential contender for the Fed role, which I think would be a disaster if Bessent became the Fed chair. I don't think it's going to happen. It's going to be Christopher Waller. Now, let's switch back to the automotive industry. There's a bunch of news here. Just like the Xiaomi YU7, that seems to be a very impressive vehicle with a very low price tag that I think is going to slash Model Y sales in China in the coming months. Same thing from XPeng, launches G7 SUV with L3 ready in-house chip and competitive pricing. So a lot of times people, Tesla bulls say Tesla is an AI company. Why? Because developing its chip and this and that. But other companies are developing their in-house chips as well. And this one is going to be L3, level 3 ready. So eyes off, hands off, basically. Which is ahead of where FSD is today. The G7 starts at $27,000 and $320 with lower prices and better features, making another strong competitor to Tesla Model Y. The G7 expected to help XPeng achieve higher sales volumes, as the company has already surpassed last year's full-year deliveries in the first half of this year. I mean, look at this. Tesla is shrinking. Tesla bulls are celebrating down 13% year over year, celebrating. Whereas Chinese companies are producing and selling a full year's worth of vehicles in half a year. So they're growing very, very fast. And this is just in China, basically. Right? They still haven't really expanded manufacturing capacity into the world, which is going to lower their cost bases even further. XPeng has officially launched the G7, aiming to carve out the share of the electric SUV market currently dominated by Tesla Model Y with its ultra-high smart driving computing power and competitive pricing. The Chinese EV maker officially rolled out the G7 at an event today, marking its first all-new model of the year, with a starting price of $27,000. This price is lower than the starting price when the G7 began pre-sales on June 11. and is 26% lower than the Model Y starting price in China. Wow, that's a massive undercutting. Specifically, XPeng offers 3 variants of the G7 with various starting prices. You can see the vehicle right here in the picture. The G7 is a mid-size SUV with dimensions of the following, as you can see. These dimensions are larger than those of the Model Y. Okay, so more room interior, more legroom probably. The G7 is the first vehicle to be equipped with XPeng's in-house developed Turing AI smart driving chip, offering a computing power of 2,250 TOPS, making it the EV model with the highest smart driving computing power to date. With this computing power, the G7 will support vision language action plus VLM large models, becoming the first AI car with L3 computing power according to XPeng. The VLA large model enables the vehicles to have active thinking and rapid decision-making capabilities, capable of handling various driving scenarios, such as actively determining the optimal route in real time. You can see another picture of the vehicle. It's a pretty good-looking vehicle. The VLM large model redefines the next-generation intelligent cockpit with AI computing power 26 times greater than current industry flagships, enabling proactive sensing and service provision. The G7 Ultra variant is equipped with the 3 Turing chips, 2 of which are used for smart driving and 1 for powering cockpit services. The 2 Max variants are both equipped with 2 NVIDIA Orin X chips, offering 508 TOPS computing power. The G7 also features the AR HUD heads-up display, co-developed by XPeng and Huawei, as well as AI chassis with preview functionality. You can see the interior right here. The model is built on the 800-volt high-voltage platform. So this is something that no Tesla has, 800-volt high-voltage electric architecture. Features lithium iron phosphate battery pack supporting 5C charging rate, which also is better than any Teslas. No Tesla today has 5C charging rate or 800-volt high-voltage platform, which are fundamentally better, allows for higher charging rates. The base model offers CLTC range of 600 kilometers, while the other 2 variants provide a range of 700 kilometers, all capable from charging to 0 to 80% in 12 minutes. The G7 comes standard with a rear-wheel drive single motor, delivering a peak power of 218 kilowatts and a peak torque of 450, enabling to accelerate 0 to 100 in 6.5 seconds. The SUV is expected to become another strong competitor to Model Y, potentially putting Tesla under great pressure in China's EV market. Yeah, I think Tesla's sales in China will decelerate and turn negative in the coming months, which is problematic for the automaker because it is the final factory that Tesla has with high capacity utilization. So that also means lower margins going forward. XPeng's goal is to double its delivery volume compared to 2024, and it now appears that this target should be easily achievable. Okay. Next, we're going to read the summary. Hyundai and Kia are cutting prices with nearly $17,000 in discounts in some markets. Hyundai and Kia are offering significant discounts on their vehicles, including EVs, in several global markets. The discounts reaching nearly $17,000 in some regions are attributed to potential slowing sales and the impact of new U.S. auto tariffs in imported vehicles. The companies are also ramping up local production in the U.S. to mitigate the impact of tariffs. And BYD is launching new discounts, offering 50% off smart driving tech. BYD's luxury off-road brand, Fancheng Bao, is offering a 50% discount on Huawei smart driving tech following the previous price cuts on BYD vehicles. The discount available in July reduces the price of Huawei package to 12,000 yuan or $1,700. The move comes after BYD's overall sales increased by 12% in June and 33% in the first half of the year. And finally, Rivian Lucid to benefit from Trump tax bill, BNP Paribas says. Shares of Rivian and Lucid rose as BNP Paribas predicts the EV makers will benefit from the end of the $7,500 EV electric vehicle consumer tax credit. The bill expected to pass the House will lead to reduced EV competition as larger automakers slow their US EV ambitions. Rivian and Lucid focus on solely on electric vehicles could gain market share, while Tesla may face continued backlash. On that note, thank you very much, everybody, and I will chat with you all next time